I'm joined by Amrita Sen, Commodities analyst at Barclays Capital. Thanks very much indeed for coming in to speak to us. So I want to start by asking you about coal, because this is, as you well know, one of Australia's biggest exports, integral to the country's economic growth. And the floods have now cost the coal industry, what, $1 billion in lost production?
Yeah, absolutely. I think 12 companies have declared force majeure. You've got 40% of coking coal production at risk, and though thermal coal is produced in a different part of Australia, still this particular area exports about 40% of the market. So big disruptions. The rail lines are not working because the grounds are so wet. The ports are in a mess, so it'll take a while to sort this out.
So what are the implications of that then for Australia's economy?
One of the biggest exporters of coal, and given that there are only 5 exporters, that's a pretty hefty loss. Obviously not just for coal, because there are also agricultural products which Australia exports, and all of that is underwater at the moment.
So what does this disruption in supply mean for coal prices in the short term?
Already they're up. If you look at prices over the last month, both steam and coking coal prices are up significantly. They're up like $30 for steam coal. And it's not helped by weather conditions elsewhere in the world either. It's very cold in Europe, parts of China. So there is no respite on the demand side either. And to add to that, other supply nations like Indonesia and Colombia have also faced heavy rainfalls. So it's a perfect storm in a way, but prices are soaring higher at the moment.
And do you expect that to continue for the best part of the year, given the other weather disruptions across the world you talk about?
I'd say if there is no improvement, very little downside from here. Having said that, if the situation worsens, the risk is only to the upside.
And just to give it a little bit more context, how might higher coal prices, as you say, they're soaring, impact on European companies, for example, the likes of E.ON and RWE, which use coal for 18% of Germany's electricity?
Yeah, it's a very good question, because often people may not connect the dots and say that this is happening in Australia. What's the impact going to be in Europe? Coal is a very global commodity at the moment. Any disruption in any of the 5 exporting countries, is Australia, South Africa, Colombia, Indonesia and Russia. You take out any one of them and supply is really, really disrupted. And at the moment, though European demand isn't growing at double-digit pace, it is still growing because it's winter. So this basically means that European coal prices are going up very strongly.
I just wanted to broaden things out a little bit, to ask you about other developments in the commodities market. I know oil is a specialism for you. I wanted to ask you what you made of comments by Fatih Birol, chief economist at the IEA. He's saying that oil prices are entering a dangerous zone and that oil import bills are becoming a threat to the economic recovery, according to the FT.
I would slightly disagree with that view, simply because if you look at the growth, where it's coming from for demand for oil, it's coming from emerging markets, countries like China and India. Over there, growth or industrialization is their main goal. So higher rising prices is not going to have that much of an impact on the economy, because over there it's much more about going out and driving your cars, as opposed to what you would see in countries like the UK or Europe or the US, where it's a much more mature economy, and yes, potentially it can have an impact on demand. But at the moment, the bulk of the growth is coming from emerging markets, so not quite sure about whether that's going to impact the economy or not.
Amrita Sen from Barclays Capital, great to get your thoughts. Thanks very much for coming in.